Good morning, students. Hello, everyone. I hope you all are doing well, studying well, mainly. So let me start again with the doubts, if any. We'll first take up your questions. आपके जो भी doubts हैं, हम बात करते हैं. And after that, we'll take up the new topic, the present one, which is our today's syllabus. So kindly raise your hand so that I can unmute you. Yes, good morning, Nitin, Pranav, Amit, Tambeshwari, Hardik, Niru, Bhumika, Shatakshi, Hardik, Vaishnavi, Riddhi. Hardik is saying, sir, question number 31 in overheads. Overheads, okay. Yes, Hardik. It is a missing value sum. I'll do one thing. I'll upload the answer, beta. Because अगर मैं अभी वो solve करने लगा तो अपना आज का session थोड़ा सा curtail हो जाएगा. And I think we have allotted only one lecture to this. So I need to give full time to this topic. Yes. Anybody, anything else, any conceptual question you have, kindly raise your doubts so that I can immediately address and solve it. Yes, students. Anybody? Any question, doubts? Conceptually fine. This is what Hardik has said. Okay. Okay. Great. Okay, students. So let us start. See, our today's topic is cost accounting. Now, cost accounting, I'm sure everybody knows by now that it is the process whereby I do accounting of the cost data. So like how I do accounting for my financial data, in the same fashion, I also do accounting for my cost data. I do accounting for my management data. And this is how you have these concepts called as cost accounting. You have the concept called as management accounting. Now, when we talk about this cost accounting, management accounting, basically, what is the first question that comes to my mind is that then what about our financial accounting? Answer is, these are all different bodies. These are all different set of accounts, and these are all having their own independent character and nature. Question is why? The answer is very simple. If you recall your 11th standard accounts subject, in that we studied who are the users of accounts. Even today, maybe in your foundation or maybe inter, you would have studied this users of account. So when we talk about financial accounting, students, users of accounts are always the outsiders mainly. Your shareholders, the government, the various types of controlling bodies, etc. However, yes, right, Harvik. However, when we talk about cost accounting and management accounting, the users are mainly the in-house people, because costing and management data is very sensitive. We cannot and we should not share it with outsiders. And also, very importantly, this particular data of costing, cost accounting, and also of management accounting has a very specific purpose. It is not only for showing your profits. See, up till now, the general idea that we have about accounts or accounting is the purpose of accounting is knowing your financial position. That is correct. But this is limited only to the subject of financial accounting. When we are talking about cost accounting, my purpose of cost accounting is not limited to knowing profit. Rather, I'll say it is not knowing profit. Then what is my purpose? Let us first understand the purpose so that you'll appreciate the nature of accounts that we are going to study. See, the purpose of cost accounting, which we even discussed in our initial lectures. One, ascertaining cost. So you should know the cost of your product. Two, fixing the price of your product. 3, ascertaining profit of each product, each activity that you are doing. 4, cost control, cost reduction. And 5, decision making. So these are mainly the objectives of cost accounting. And as you can see, they are totally different from your financial accounting. Now, once you have understood this, let us now go to the details of the types of cost accounts that we prepare and how they are different from your regular financial accounting. Let us try to understand. Okay. Now, let me first draw before you the accounts that we prepare in case of financial. So when I'm talking about financial accounting, in my financial accounting, the accounts that we prepare according to me are broadly of 4 types. So I'm firstly talking about financial accounting. Your accounts are broadly of 4 types: expenses, incomes, assets, and liabilities. I hope I have not missed out any. And according to me, there is no other account except these 4. If by chance any of you know any other account, kindly enlighten me as well. So according to me, these are the only 4 types of accounts that you prepare whenever you are doing financial accounting. Yes, students, am I correct? Anybody has any special inputs on this? So capital account is a liability, na? Yes, beta. Sandro, capital account is a liability, na? Okay. Now, pay attention. Why do we prepare these 4 accounts? Because our purpose of financial accounting is mainly ascertaining profit, finding out our financial position. And how that is done, at the end of the period, we prepare our financial statements, which majorly includes trading P&L account and balance sheet. And in order that we can prepare these 2 accounts, that is why we have these 4 accounts where this will be transferred to P&L and this would be carried forward to balance sheet. This is how our financial accounting is designed. So, just to have a interesting start, I ask you a very simple question, right? What are these? What is the question? The question is, you all have studied in the horizontal format of balance sheet that this side is assets and this side is liabilities. Now I'll ask you a very, very basic question. Why is the right side the asset side and the left side the liability side? This question was asked in one of the interviews of a very big corporate. I should not name it because we are on a public forum. And it was for the CFO level job where they were hiring people with minimum 15 years of work ex. And obviously the package was 1.2 CR. In that job interview, this was the question. Now, let me see how many of you can crack this 1.2 CR job interview question. Okay. So, anyways, beta, balance sheet does not have a debit side and a credit side. Na? Why is this side asset and this side liability? Hardik, if you can explain, it would be better. Okay, somebody is saying it is a convention. See, obviously, Pranav, I agree to your point. It is a convention. So the question is, how is this convention set? There should be some reason of setting this side as asset and this side as liability. No, it could have been other way around also. So whoever set the convention had something in mind. Like when you drive in India on the left-hand side, and you drive in the foreign country on the right hand side, these are set rules by the RTO. But there is a logic for that rule also. Why in India you will drive on the left hand side and why in foreign country on the right hand side? Similarly, here there is a logic. Bhumika, again, firstly, I don't agree to what you have said. This is my personal view. And secondly, even if I go by your view, still, how can you say, Acha, so you mean to say, so again, you are taking the debit credit side, but beta, Bhumika, there is no side, debit credit side in balance sheet. So you cannot say this side is credit side and this side is debit side. I think you're going by that logic. Ritika is saying, sir, as assets are sources of funds, liabilities are applicable. Okay, so it is for convenience. Again, Ritika, even if it is for convenience, why the convenience wants right side to be asset? Okay, matching of their application, balance sheet is like a mirror which reflects. Oh, bapre. Nuruddin, I really appreciate your way of expressing. So it is like a mirror, so it is reflecting opposite. Good. I like this. I would have hired you for the job, whether the answer is right or wrong. Okay, Nitin. Balance sheet is a statement. Exactly. So that is what I'm saying, Nitin. There is no debit credit side to balance sheet. So you cannot give me explanation this side, credit side. That is why you put some assets over there or income over there, etc. That is not applicable to balance sheet, Nitin. I agree to you 100%. Balance sheet is like a nominal account. Please don't say this. Balance sheet is not any account. Forget about nominal, real, personal. And anyways, even if you want to call it as any account, it cannot be nominal, beta. Reason is balance sheet does not have a single account which is a nominal account. It only has personal and real account balances, no nominal balances. Hardik, so how you prove that this side will be asset by your explanation? Aisha, okay, you can bold also your chats. I was not doing this. So left side is sources of funds. Asset side is investing. Okay, beta, I agree to all this. The liability side is sources. Asset side is investing. But why right side and left side? This was a question. CFO level 1.2 CR. सर फॉर द रीजन कैपिटल सबसे पहले आता है. ओके अग्रीड बेटा. सो कैपिटल पहले आता है तो राइट साइड पे क्यों नहीं आया पहले कैपिटल? तो राइट साइड से शुरू कर सकते हो ना आप. Expenses left, so asset is right. Tameshwari, what is the logic of this? Assets should be invested right. Vaidahi, I didn't get this. So I invested right. Acha. Okay, chalo, bas. It was a great fun for me. I would just hope I could save these chats for my future reference. Sir, some chats are really very interesting. Chalo, bas. But I'm happy that new people have joined in this discussion. So I'm getting to read some new names: Satakshi, Noruddin, Anil, Nivetha. I think they are interacting me for the first time. Sandro. Good. So at least I was able to ignite. Now let me come to this answer. See, students, there is no side of balance sheet like debit or credit. You all agree? Firstly, what is a balance sheet? It is a sheet showing balances at the end of the year. What is a sheet? Sheet is a paper. Same like your cost sheet is a paper. So what is a balance sheet? It is a sheet. It is not a ledger account. It has no sides. It is a sheet which will show balances at the end of the year. Those balances where we have not closed the account by transferring it to P&L, those balances which we want to carry forward. Now, make a list of assets. Let us say debtors, land, building, plant, machinery, fixed asset, or maybe your investments, right? These are all your assets. Your closing balances appear on this side, right, students? And let me name few liabilities. So you have the capital balance, you have the unsecured and secured loans, you have the sundry creditors. When you close these, the balance is here. Now, I'm a simple knave person who is asked to tally my books. by making a total of all the balances. So as a naive person, what I did, all the balances which were appearing on this side, I'm now not using the word debit or credit. I simply put it on this side. All the balances which were appearing on this side, I simply put it on this side. I did not call it as asset or liability. Please understand. I first started putting the names. So I found that on this side, the balances that are appearing represent land, building, investments, debtors, cash, bank, and the balances which are appearing on this side, when I started just listing them down from my ledger, I found the balances are capital, reserves, secured loans, unsecured loans, creditors. After listing down these accounts as per what they are appearing in books, so in my ledger, all these accounts are appearing on this side. So I simply copied it on this side. These accounts are appearing on this side. I simply copied it on this side. After copying it, when I observe these accounts, I found, oh, these are all my assets. So let me call this side as asset. Oh, these are all the ones which I have to pay, which I owe. So they are my liability. Let me call it as liability. So it is not that right side is asset, hence you write this. It is the other way around. You write these, hence this side is asset. You write these, hence this side is liability. And why you write liabilities here? Because the liabilities have balances on this side of the account. Why you write assets here? Because assets have balances on this side of the account. So students, there is a logic for everything. Even rules, conventions are made with logic. Only then they will survive in long term. There may be certain rules which are made without logic, maybe because they are in haste of making the rules or they want to make something and they do not yet know the logic. But when such rules are made which are not having logic, they will get denounced in future whenever the logic is challenged of the rule. And in some day or the other, the logic gets challenged. So that is why, don't worry, Pranav. I'm sure 99% of the people may not be knowing this, but that is fine. That is how we grow. That is why I always keep on myself attending lectures of so many learned people, of other teachers, because everywhere I get to know so many new things which I'm not knowing. And that is what I like. So I always call myself whenever I engage lectures and I prepare PPT, at the bottom I always write my name as CA Vishal Podar, student of GST. Why? Because we are still so many things to learn in this world. Nitin is saying P&L account cross show, balance sheet cross show. Sorry, but I did not get this cross show. Acha. Yes. Anil beta, it is simple. Asset, when you write the closing balances, where is the closing balance of asset account written? It is written on the credit side. You write buy balance carry down, buy balance carry down when you are closing any asset account. And when you are closing any liability account, you write the balance on the debit side, two balance carry down, two balance carry down. So all the left-hand side balances are put in the balance sheet on the left-hand side, which are all liabilities. Right-hand side closing balances are put in the balance sheet on the right-hand side, which becomes asset. Anil, I hope you got my point. Okay, students, let us proceed. Now, once you have understood the nature of financial accounts and the purpose. So the purpose is knowing your financial position, which is identified by these accounts majorly. And now we have cash flow, fund flow, so many other financial statements, but majorly these are the statements which are prepared. So for the purpose of knowing your financial position, these four types of accounts are drawn whenever you are doing financial account. Now I come to cost accounting. The purpose of cost accounting is not knowing the financial position. I repeat, it is not. Then what is the purpose of cost accounting? The purpose of cost accounting, as I said, ascertaining cost, fixing price, knowing profit of each product, not of the business or the entity as a whole, but of each product. Then also doing cost control, cost reduction, and decision. Now, to serve these purposes, Basically, cost accounting people say, okay, we will prepare expenses account because costs are made of expenses. Then most important thing which is different is they prepare product accounts. Why this? For the purpose of finding out cost, fixing price, ascertaining profit of each product, or cost control, cost reduction. See, all these objectives are possible only when you identify cost of each product separately. Now, how is this done? We open expenses accounts. All different expenses accounts are open, and we open our product accounts. Now, let us say this is material. When I purchase material, this is debited. Let us say 1000 kgs of material is purchased. Now, out of 1000, when I use 200 for product A, I will transfer it from here to here, which is called as charging in costing. We have used this word in costing, that is charging. Similarly, out of 1000, I have used 250 units for product B. I will transfer it here. That is, I have charged this. Similarly, let us say the next expenditure is of labor or wages. I have incurred wages for the whole month, rupees 20 lakhs, out of which 5 lakhs is the wages paid to the workers who have devoted their time for product A. 12 lakhs is for the workers who have devoted time for product B. So this is how, when I start doing accounting, I get cost of each product. Once I know cost of each product, my first two objectives are satisfied: ascertaining cost, fixing price, because now I know cost of each product. So simply what you are doing in cost sheet in a statement, the same thing will now happen in ledger accounts. That is knowing cost of each product, fixing the price. Third, we will be preparing product account not as a single account. For each product, we will prepare 3 accounts: WIP, FG, COS. I'll explain this in detail. So for each product, we will prepare 3 accounts. So if you have 100 products, let us say, so for every product, you have not 1 account, you have 3 accounts. So you will have WIP of A, WIP of B, WIP of C. Similarly, finished goods A, finished goods B, finished goods C. Now, why you prepare the account for each product in 3 categories or in 3 stages? Because I also want to do cost control. I also want to do cost reduction. Cost control, cost reduction is possible only when I do detailing of my cost. So if you want to control anything, if you want to reduce anything, you have to go to the detailings of it so that you can identify where there is a problem which I can control or reduce. So for each product, we prepare accounts 3 for each, because I will be doing costing of each product, but stage wise, so that I can also do cost control, cost reduction. Now, this is how you observe that the cost accounting is different from financial accounting. One, expenses accounts are there like financial, but over there, the names of expenses are purchases, wages, salaries, rent, depreciation. Here, the names of expenses are material, labor, overheads. That is the difference in expenses account. And secondly, what is not there in your financial accounting is that here, since I want to do costing, since I want to do charging, I prepare product accounts. Firstly, I should prepare product account for each product, but it is not prepared by the name of the product. It is prepared for each product in 3 stages. So for every product, I'll have WIP account of that product, finished goods account, COS account. This is done so that I can do charging more precisely, and also at the same time, it should help me in cost control, cost reduction. So this is broadly the structure, the format of cost accounting. Any questions or doubts, students, before I go to the detailings of this? Sai Kiran says, sir, financial account contains PA&D expenses and incomes, balance sheet assets, liabilities, but not off balance sheet items, contingent liabilities and asset. Explain, please. Sai, firstly, how can you say these are off balance sheet items? First, because they have not yet been incurred. What is contingent? We are expecting it may or may not happen. It is dependent on certain uncertain event. That is what is contingent, right, Sai Kiran? Now, Sai Kiran's question is, sir, why off balance sheet items are not appearing in financial accounts for the simple reason financial accounts or any accounts does recording of the transaction after the transaction has happened. And contingent items are those which we are today only expecting, we are guessing it may not happen. So until and unless a transaction has happened and it is something like contingent, it may even not happen, then why will we account for? So we do not account for those transactions which have not happened or which may not happen. Hence, but again at the same time for better presentation, we show it as a note so that we are even informing to our readers that okay, it is not part of account because it has not happened, but there is some percentage possibility that it may happen. That is why we are also reporting. So we are only reporting means informing by way of accounting notes. Fine, beta Sai? Cost of sales is not an expense account. Okay, Sanya is asking, sir, why cost of sales is not an expense account? See, but expense accounts are material, labor, and the three overheads, right? These are product accounts. Even though the name is cost of sales, it is actually representing the product at its final stage. That is the stage when the product is getting sold. So that is why don't go by the name that it is cost of sales. So why it is not expense? See, I have to give some name to the product. So I have given it on the basis of where the product is today. If it is under processing, I call it WIP. If it is processed and lying in my godown, I call it as FG. And once the product is sold, I am showing it in COS. So COS represents the cost of sales of those products which are sold. Ultimately, this will be transferred to profit and loss debit side only. So in a sense, Sania, what you are saying is also correct in a sense, right? Okay. Yes, Hardik, we did the same thing in overheads because in overheads at the last, you were doing this only. What you were doing in overheads at the last, you were doing the final closure of the overheads account and you were trying to adjust the difference in the overheads account. Hence, for adjusting the difference, we were required to prepare these accounts. That is why, if you recall your overheads, last part what we studied, that was under or absorption of overheads. Yes, we did the same thing because ultimately at the end, if I have to transfer expenses to the product, and if you remember, we were transferring only the normal portion of the under or absorption to products. So we have to transfer it to the products, and the products are in three stages or are appearing in three different account heads. So that is why we charge the difference in the three account heads, right? Yes, and abnormal to cost period. Correct, Hardik. So students, I hope you got a broad overview of cost accounting. So in cost accounting, I have brought two category of accounts. One is the expenses, one is product, and each product is divided into these accounts. Fine. Now let me take you to the detailings of cost accounting once you have understood this. So as you have your ledger in your financial books, in your cost books also, we have the cost ledger. So these accounts, what I'm preparing, where are these accounts appearing in which book? If somebody wants to know or if somebody asks me, so I'll say these appear in your cost ledger, like how your regular accounts appear in your financial books, financial ledger. So these accounts appear in my cost ledger. I hope this is clear, students. Any questions on this? Now I'm going to prepare these accounts in detail, and we are going to study in detail the entries that need to be passed in these accounts for doing the cost accounting. And also we are going to study the different methods of cost accounting, which is also called as cost accounting systems. Now, as I said, in cost accounting, we prepare broadly two categories of accounts. One is the expense account and the other is the product accounts. Now in costing, as you all know, for us, expenses are material, labor, and expense, and then direct, indirect, and majorly all expenses majorly are indirect. So we call them as overheads, where even we transfer the indirect material and indirect labor because all indirect are called as overheads under the costing system. Now, when we prepare the cost ledger, like how we prepare our financial ledger, we prepare the cost ledger. The accounts that are prepared in the cost ledger have a technical name. But before I go to the technical name, I'll give you the simplified name so that you can understand them. So what is the simplified name? For expenses, I am firstly using the simplified name, which you understand, material. So our first expense is material. The second expense, the simplified name is labor. We call it as labor only. However, there is a technical name. I'm coming to technical. And then you have the three overheads. So you have the factory or the manufacturing or the production overheads. Then you have the administration or the management or the office overheads. And then you have the selling and distribution overheads. Fine. So these are the 5 expense accounts that we will prepare when we are doing cost accounting: material, labor, and the 3 overheads. Now, I'm sure it is easy to understand because we have been doing costing since a while. So now you are used to these names in costing: material, labor, and overheads. Similarly, as I said, for each product, we prepare 3 accounts. So first account is the work in progress account. The second is the finished goods account. The third is the cost of sales account. And the last is your costing profit and loss account. Fine, students. Is this clear to all? So these are the various ledger accounts that we prepare while doing cost accounting. Firstly, for the expense, 5 accounts, and for the products, 3 accounts, and finally the costing P&L account. These accounts help me serve the purpose for which cost accounting is done. 1, ascertaining cost. On that basis, fixing price, cost control, cost reduction, ascertaining profit of each product, and finally decisioning. Now, actually, as far as cost accounting is concerned, their role is over. Their role is over with this. They need no other account. Yes, Kasak has raised a very good question. Sir, what about direct expenses account? So, Kasak, yes, that should be there. But we never prepare direct expense account for the simple reason that, please pay attention, students. If you observe, you will find that even in cost sheet sums or in any costing chapter, whatever you have done till now, whenever expenses were given, direct expense was appearing very rarely. And that is what is a scenario in real life also. Direct expenses are very rare because they are very limited. Like the common most example is royalty. So since they are very limited, they appear only in some very specific scenarios. They are not present in all the scenarios. Hence, in real world, in real costing, also direct expense do not appear always. And since they do not appear always, hence, even in your academic books, you will not find direct expenses in majority of the sums. And hence, we do not prepare a separate account. But obviously, the follow-up question would be, sir, then what we'll do when we actually have a direct expense? That we will see. I hope I'm clear up to this point. Right, students? Now coming to the main part. Now, I can start doing cost accounting with these accounts, but there is one small problem. And that one small problem is, when I will pay these expenses, when I will incur these expenses, I need to pass an entry which follows the double entry principle. That is, there should be a debit and credit effect both. And for giving the debit and credit effect both, I need some more accounts. Like if I'm paying something, that expense is paid through cash or bank. So for completing the journal entry, I will require the cash and bank account. Similarly, if the expenses is on credit, let us say I've made purchases on credit, the second effect that I need to give is to creditors. So what I require now is not for the purpose of cost accounting, but for the purpose of completing the dual effect. That is, I require the assets and liability accounts. Now comes the most important point, students. Please pay attention. The important point now is we have two methods of cost accounting. Two methods of cost accounting are, first method is called as the integrated system of costing and cost accounting. And the second is the non-integrated system. Now, what is integrated and what is non-integrated? Integrated system means, now see, you are already studying accounting right from standard 11. And which is that accounting? It is financial accounting. And today at the start of the lecture, I already mentioned that financial accounting, cost accounting, all these are different domains. These are different, what you can say, practices. All accountings have their different logics. As you can see here, the account heads are different. Now, what is an integrated system? It says that since you are going to use the same data, from that same data, one, you will prepare all, you will pass all the journal entries, prepare all the ledger accounts, prepare a balance sheet, that will be financial accounting. From the same data, you will again prepare these accounts, you will find out product costs, etc. Then, can we merge both of them and prepare one set of books? Answer is yes. So if you merge both financial books and costing books and prepare only one set of books, then that method is called as integrated, where you will not have two separate books. For financial accounting and for cost accounting, you will maintain only one ledger. So there will be no separate cost ledger and no financial ledger. There is one ledger. In that, all the accounts are merged and prepared in combination. Now you'll ask, sir, how that is done? So if I have to do integrated accounting, what I will do is I will open all these accounts which I just explained. So all the expenses accounts, all the product accounts. And after this, I will open all the asset liabilities account which are left. So I have debtors, I have land and building, plant and machinery, that is all my fixed assets. Then I will have my capital and reserves. I will have my creditors, sundry creditors. I will have my cash and bank. So what I will do is I will prepare these accounts. Now, this becomes a complete set which will help me do both costing and cost accounting in one set of books. So by these accounts, that is all these 5 expenses and all these product accounts, I will be achieving my costing and cost accounting objective. And then when I will prepare this costing P&L account, I will get net profit of the business which you want for your financial purpose. And from these assets and liabilities accounts, I will be at the end able to prepare my balance sheet as well, which will show balances of all these ledger. So all my purposes are solved. Firstly, with these accounts, my cost accounting purposes are solved. Then from costing P&L, I will also get net profit. And from these accounts of all assets and liabilities, I will be finally able to prepare my balance sheet. So from one set of books, both the objectives are satisfied. This is integrated. What is non-integrated? Non-integrated says, Baba, don't mix your and mine books. You keep separate, you maintain separate. Maybe your entire department would be different. So we have a separate financial department where few people are employed and they are only doing financial accounting. And we have a separate cost accounting department where again few people are appointed who are doing only costing and cost accounting. So I say, okay, Baba, let us keep ourselves separate. You do accounting, financial accounting, I'll do cost accounting. In that case, how will my costing books prepared? See, financial books you already know. They are prepared separately and you have studied from 11th standard how they are prepared. In my costing books, Again, I will prepare in my cost ledger all these ledger accounts, expenses accounts, product accounts. This will satisfy my cost accounting purposes. I will prepare costing P&L. So up till this point, my accounts are same in both the methods. But in non-integrated system, which I'm just explaining, I still have the requirement of all these accounts. Which accounts? Debtors, plant machinery, land building, reserves, capital, cash bank, creditors. I need all these accounts still. Why? Because I want to complete the second effect. But I don't wish to prepare any balance sheet because balance sheet is already prepared by my financial friends. They are already preparing their P&L balance sheet. So the purpose of financial accounting is already served by them separately. I need not look into their purpose. I only need to look into my purpose, which is satisfied with the other accounts. But the problem is, in order to complete the accounting, I need the asset and liabilities account. So what I do in non-integrated system is I simply prepare one single account. This account is my debtor. This account is my creditor. This is land. This is building. This is plant machinery. This is investment. This is creditors. This is capital. This is reserves. All asset liability accounts combined into one account. तुम ही हो माता पिता, तुम ही हो बंधु, तुम ही हो सखा, तुम ही हो. The same fashion, debtor भी तुम ही हो, creditor भी तुम ही हो, land building भी तुम ही हो, capital reserve भी तुम. So in my non-integrated books, the accounts that are prepared are firstly all these accounts for expenses, all these accounts for products, P&L, and this. This is non-integrated books. Integrated books, all these accounts for expenses, all these accounts for products, P&L, and then all these assets and liabilities account, which will eventually help you prepare balance sheet. So from one set of books, both purposes are solved. So this is the difference between integrated and non-integrated, where you will find that the left-hand side, both series of accounts are same. Only the right-hand side, either you have independently asset and liabilities account prepared, or you have one account for all assets, liabilities combined. This is the only difference between the integrated and the non-integrated system of accounting. Firstly, students, have you understood the difference between the two systems of accounting? That is cost accounting. One is integrated, one is non-integrated. Now, first raise your questions relating to these two methods before I can proceed and go ahead. Okay, Srini has a question. Sir, please explain whether this costing system is considered after or before the final fixation of price of the product. Good question, Srini. Sri, please don't mix between two things. One is decision making and one is accounting. Like fixation of price of a product is a part of management decision making. So management has to decide considering so many factors like the demand for your product, the shortage of your product, or the competitors, or the government policies, or the future, or the nature of market, etc., etc. So many things, Srini, goes into fixation of price. Many times. Now I'll try to link this with economics. Students, please pay attention because FM costing are subset of economics. So whenever you want to understand any concept, link it with economics, you'll understand it better. So in economics, you studied forms of market: oligopoly, duopoly, monopoly, pure competition, perfect competition, etc. What was the difference in all these methods of accounting? Number of firms, number of customers, nature of goods, and also most important point, whether these firms are price takers or price makers. Now, Srini, let me tell you what happens in real life. In real life, when you are in a pure competition, which is normally the case, when you are in oligopoly, which is normally the case, if you find outside in the real market scenario, you will find all these market forms. You don't have monopoly, right? You have oligopoly, you have pure competition. These are the general forms of market in different sectors. Now, in all these forms of market, Srini, one thing is common. You are a price taker and not necessarily a price maker. So firstly, answering your question, price fixation is a different activity. It is done by management and many times they may not be themselves deciding the price. They may be only accepting the price which is there in the market. So to that extent, they are price takers. But for the purpose of internal check, internal control, we do our own costing. So for that, we are doing this costing and cost accounting to find out our cost, to ensure that whether or not what we are doing is right or wrong, whether we can survive in competition, etc., etc. Now, answering your question specifically, that whether costing system is considered after or before final fixation of price. So my answer is Srini, both are independent. On the basis of all this explanation, I'm sure you will be able to understand this. Both are independent means what? Financial accounting and cost accounting, these are accounting. The department is different. Their work is whenever transaction happens, pass an entry, ledger posting, balancing, closing, etc. They have nothing to do with the costing part. So costing is done by different set of people. And as I said, in many cases, you are only price taker. So both are independent. You cannot say what is before, what is after. They both run parallelly. But yes, whatever price you are, let us say you are accepting a price and selling your product at that price. But at the same time, you keep on doing costing just to know that whether you can survive in the competition or not. What is the need to have integrated and non-integrated accounts? But firstly, Anil, the question is, what is the need to have accounts? The same is the need to have integrated, non-integrated accounts. Firstly, the question is, what is the need to have cost accounting? The need to have cost accounting, I said, you have 5 major purposes of cost accounting. And today, any business in the current highly competitive world, costing becomes integral part, indivisible part. You cannot ignore costing because you need to survive in the market, and for that you need to do costing. Now, once you need to do costing, you need to do cost control, cost reduction, without which you cannot survive in today's market. Hence, the accounting becomes important. I'm talking about cost accounting. And then secondly comes integrated, non-integrated. Obviously, once you have to do accounting, you have to select one of the methods. Now, students, coming to my main question after all this explanation, the main question that I want to ask is, out of these two, integrated and non-integrated, which one do you feel would be applicable in the real world? You can write I for integrated, N for non-integrated. What do you think, students, out of this would be applicable in the real world? Integrated or non-integrated? Wow. I'm happy to see majority of students clicking the right button. Dear students, let me inform you, it is always the non-integrated. Integrated is practically never followed, and that is why even in your exams, it is having a very low weightage. The main question is why. I always say you should know 2 things in life to understand or to get knowledge. One is what, and the second is how and why. So I'm answering why. Why I'm saying non-integrated is used in the real world, because if you prepare integrated, what will happen? You will have only one set of books for costing and financial, and those books will also give the costing data because it is merged. And as you know, the financial requirement is that your data will be seen by all outsiders, because that is the main purpose of financial reporting, and the reporting is done to outsiders. This could be very, very risky as a businessman, because your data is going outside. So that is why nobody would like their costing data going outside. Hence, practically, people do not follow integrated. It is always non-integrated. Fine. Now we start with the technical part. After understanding the conceptual part, let me give you the technical names. Now, this material account, you can call it as material for your reference, but it will be called as stores ledger. I'm sure you know this account. FIFO, LIFO, we always do in stores ledger only. So it is stores ledger control. In short, SLC. This labor, which is your wages accounts in your language, or salaries account, is labor cost control, LCC. This is production overheads control, POC. This is administration overheads control, AOC, selling and distribution overheads control, SNDOC or SNDC. This is work in progress control. So WIPC, finished goods control. So FGC. So these are the technical names that are used. So mainly the name has changed for material only, but this name also you know because FIFO, you all know we have done a FIFO in foundation that was prepared in your stores ledger, and stores ledger is SLC over here, that is stores ledger control account. So the account head given over here is stores ledger control. For labor, it is labor cost control. So you do not have wages and salary account. That is what you prepare in financial. Here, the salary wages are all represented by LCC, labor cost control. Then the three overheads you already know. So production overheads control, administration overheads control, selling distribution overheads control. Then for products, we have three stages of accounts. Firstly, you have work in progress control, that is WIPC. You have finished goods control, and you have cost of sales. Then you have costing P&L. Now coming to the main, this account, which represents data, creditor, land, building, plant, machinery, etc. What is this account called? There are two technical names. One, it is called as cost ledger control, CLC. Or there is another name that is also used, general ledger adjustment account, GLA. So you can call it as CLC, cost ledger control, or GLA, general ledger adjustment. These accounts are called same: debtors, creditors, cash bank, land, building, and capital reserve. So these are same, right? So now these are the final names of your different ledger accounts. Okay, Tambeshwari has a very good question. Why you are using the word control? Now, whenever I ask this question to students, generally the answer that I get from students, which may also strike your mind, is sir, because we want to control the cost. That is why these accounts are called as control accounts. But that is not the very correct answer, students. The reason why these accounts are called as control, because these accounts are representing certain other book or certain other ledger, or I'll put it differently. These accounts are summary accounts. Now, what do you mean by summary accounts? Let me explain. So for this, let me first tell you again something very interesting. We all have seen in our financial books that we prepare sundry debtors and sundry creditors, right? Actually, there is no account in the books called as sundry debtor or sundry creditor. Do you know this? I repeat, there is no account in your books called as sundry debtors or sundry creditors. And this is the fact. Now, if somebody is shocked to hear this, then obvious question is, sir, then we have been preparing this from standard 11. Second point would be then, sir, what is it then? Answer is, you have accounts by the names of the persons who are your debtors or creditors. So let us say I'm your debtor, so you'll have Vishal Poddar account. If some company is your creditor, you have ABC Corporation Limited account. So you have hundreds and thousands of accounts by the names of the persons who are your debtors, who are your creditors. But for the purpose of grouping, for the purpose of classifying, we group these accounts under one common name, which is sundry debtors. Now let me inform you the technical name of this. It is also called as debtors ledger control account. It is also called as creditors ledger control account. Again, similarly, if I talk about plant and machinery, what do you think? Plant and machinery is one account? Answer is no. You go to any decent size industry, not even a very big size industry, even a decent size industry will have multiple types of machines. I'm sure you'll be able to understand and visualize this. Now, if these have multiple machines, all are of different types and make, all are used for different purposes, all are purchased at different points of time, and all may have different lives, different rates of depreciation. Can you prepare one account for them? Answer is you prepare one control account for them. Now, when you prepare all these account heads by the name control or by the name sundry, whatever, what exactly it is? It is that you are trying to inform the readers of your accounts that this is just a summary account. If you want independent details, go to the separate ledger. Now I'm talking about better financial books just for understanding this particular point. So you have a separate book called as debtors ledger. See, we have subsidiary books. Huh? So one of the subsidiary books is debtors ledger, where you have accounts by the independent name, Mr. A, Mr. B, Company C, Company D, then LLP X, partnership firm Y. So whoever with whom you are dealing, doing your business, you need to prepare independent account because you need to know everybody's outstanding, who has been given discount, who has made bad debts, to whom I need to do some special recovery. You need to know this independently, and hence you need a separate account for each of them. So that is opened in the subsidiary book called as debtors ledger, creditors ledger, plant and machinery ledger. And in your main book, in your general ledger, you have one representative account. Now, this is representative. This is what you want to tell the world. So you write the word either control or what we have been groomed that you write the word sundry. Sundry represents that this is not your main account. The main accounts are here in a separate book, in a separate subsidiary ledger. This is just the summary of all the accounts. So those who do not want the details, they only want to know how much debtors are there. You come to the sundry account, you come to the control account, you know, you'll get the overall balance. You'll get the overall figures. But those who want to know independently, individually details, they will go to the specific subsidiary books, get the independent details. Same fashion, same logic in your costing books. I do not have a single material. Now, depending upon what I'm making, like if I'm Mahindra and Mahindra, Tata Motors, I will be having more than 500 items which go in making one single vehicle. Now, what do you think? I'll have one account for all the materials? Answer is no. I need to find out EOQ. I need to set stock levels. I need to do costing. I need to do charging. So I cannot do it by a single account. I will have a separate ledger. Same like this for your financial books. You have subsidiary. In the same fashion, in costing books also, we have subsidiary books. And here I have my stores ledger, same book in which you have studied FIFO LIFO in your 11th standard, 12th standard, and in your foundation. In stores ledger, I have separate account for each of those 500 material items. And for each material, I have a separate EOQ, separate stock level, everything independent. But here in my main costing books, I have only one account for material. And since it is a sundry account, it is a representative account. Tambeshwari beta, we use this word control. So like how we are using sundry in our financial books. Actually, over there also the word control is used, but we have not been groomed to use that word in our day-to-day accounting. But actually, if you go to corporates and the actual accounting, if you go to ERP, you will find these words control very commonly used there. So control in simple words, Tambeshwari means sundry. So it just is a suggestion that this account is not the main account. It is a overall summarized account. If you want independent details, the main accounts are kept in some separate books or separate ledgers, like here stores ledger, like here labor cost ledger, because again, there is no one type of employee working. And if I want to do labor cost control, If I want to pay them wages, if I want to give them incentives, it will be independent for everyone because everybody will be having different rates of wages, different efficiency level, everything. So their independent details are maintained here, but summary is maintained here. That is why it is called as control. I hope this is clear, Kameshwari, and also to everyone because this is a very important conceptual point. Fine. Hardik is saying PPE. I did not understand what is PPE. Nitin is saying, sir, general ledger adjustment account. This account is made to complete double entry. Yes, Nitin. So what is general ledger adjustment account, Nitin? When I need to put some entry in debtors, creditors, land, building, plant machinery, investment, creditor, capital, reserve. For all this, I will use one single account, cost ledger or general ledger adjustment. So by using this one account, I mean debtor also, I mean creditor also, I mean land also, I mean capital also, everything in one account. Right, beta? Okay. So students, I hope things are clear up to this point, whatever we have discussed. Anybody having any questions? Now I'm going to start with the actual ledger entries. No? Everybody clear up to this point, students? Everybody clear? Excellent. Now, things are going to get more interesting because we are going to study your favorite thing, that is journal entries, which I have got to know that students like a lot. So much so that they like it so much that they never want to do that because they like it very much, right? And the things which you don't like, you always want to do it again and again. So this is the paradox. Now, I am right now not going to write the journal entries as such. I'm going to give you the conceptual entries. Why I'm saying conceptual? Because normally when we write journal entries, we write to and the name of the account, by and the name of the account. Here, I want to show you the actual flow of the transactions. So this to and by I am not writing. Rather, I am not even writing the ledger account heads. I am showing you the actual entries conceptually. Because if you understand this, then understanding the entire cost accounting would be easy. So here I will need your help. I will tell you what are the transactions. You have to tell me the journal entries. You can use these short forms SLC, LCC, POC, WIPC. In fact, you need not write C also. You can simply write WIP, FG. I'll understand, right? Sai is asking, sir, in cost sheet, after doing adjustment for stock by reducing closing stock, we are arriving cost of goods sold. Then for making administration, sales department expenses adjustment, whether we have to sold goods portion of expense or entire goods. Sai, beta, let me park your question because right now it is not related to this. So kindly ask me questions only related to cost accounting because what I'm going to explain now will require complete attention here. Also, most importantly, as I said, I need to complete this in this session. So I need to explain you everything in this session. So beta, please allow me. Don't take it otherwise. Your question is slightly off track or not related to this topic. It is more relating to cost sheet. I'll cover it in the next lecture when we are going to do batch costing, etc. Fine. Okay, students, now you have to give me entries for cost accounting, right? My first question or my first transaction is purchases. What will be the journal entry that you will pass here in cost accounting if the transaction says purchase? Obviously, purchases of what? Of materials. Hardik, how can it be SLC to purchase? Do you see a purchase account here? You have to give me the account heads which we are preparing. These are the account heads. In fact, SLC itself is purchase. Nitin, you're right, but don't give me the general names. Now give me the technical names. So don't call it as material because material is a general name which we are not going to use in cost accounting. but it cannot be WIP, Bhumika. Vaidehi, don't give me generalized names. Material is a generalized name. For now that you have to identify, focus on whatever we have written. You will get to know. Good. Deepak, you are not correct, beta. Ajay Surya, fine, but you have to give me the entry in debit credit format. Kasak, what is to credit? Nitin, beta, there is no material account. Material is a generalized name. I don't want generalized name. Okay. Good. So pay attention. Now I'll give you a simple trick. If it is difficult for you to directly identify or pass the entry of cost accounting, do one thing. First, find out the entry in your normal financial sense. So in financial books, what is the normal entry for that transaction? First, identify that. So if I say you have made purchase of material, what your financial books will do? It will say the entry is purchases 2. If it is purchase for cash, you will credit cash or bank. And if it is purchase on credit, you will credit creditors, right? So this is your entry firstly in your financial books. Now, once you have identified your entry in the financial books, now convert this into costing by substituting the names. So purchase over here, obviously purchase, as I said, is of material. So instead of purchase account, we have the stores ledger control account, which represents the material. So instead of purchase, my account head would now be SLC. So the entry is SLC debit. Now what is credit? For credit, as I said, to complete double entry, you require assets and liabilities, like you need cash balance, bank balance, creditor balance. But you have to now check which is the method of accounting you are following, whether it is integrated or non-integrated, because the entry will change here. If it is non-integrated, right, then you will not have any account head called as capital reserve, etc. So in non-integrated system, instead of these accounts like debtors, creditor, you have another account like cost ledger or general ledger adjustment. So if my method of accounting is non-integrated, the entry is SLC to CLC. This represents debtor, creditor, cash, bank, everything. Correct? CLC means this account, cost ledger control account, or it is also called as general ledger adjustment. But if my method of accounting is integrated, then for purchases, I will have CLC account, which is debited. And for cash bank creditor, I have these accounts in integrated. I have prepared a cash bank account. I have prepared a creditor account. So my entry would be to cash or bank or creditor as the case. So for non-integrated, this is the entry. For integrated, this is the entry. And I'm talking about the first transaction, which is of purchases. Have you understood this, students? Students, is this entry understood? Because I'm not interested in this particular entry. I'm interested in explaining you the logic. So once you understand one transaction, now other transactions will become clearer. Now, how will this appear? So here, pay attention, students. Whatever I have purchased is debited here. Achha, I'm not showing the actual posting. I'm showing the concept. Now, what you would have purchased, either it is a direct material or it is an indirect material. Whatever is purchased is debited here. So either it would be a direct material or there will be a indirect material. So your purchase is debited in material account, and the second effect is it is credited here. Direct material, indirect material. Direct material, indirect material. Whatever it is, the purchases are debited in the SLC account and credited to creditors or cash bank if the method of accounting is integrated. If it is non-integrated, it is credited to this account. Indirect material, direct material. So this is the entry for purchases. Credit to this account or to your cash bank or creditors account, depending upon the method of accounting, and debit will be to the SLC account. Hope it is clear to all. Bhavna beta, CLC and GLA are one and the same. You can call it as CLC, you can call it as GLA. Both will mean one and the same. Shrini beta, this entry is for cash and credit both. If it is for cash, now firstly Shrini, the method of accounting is non-integrated. The entry is SLC to CLC. CLC represents cash bank also, CLC represents creditor also. And if your method of accounting Shrini is integrated, the entry is SLC to cash or bank or creditor. So this entry which I have given is for both, for cash transactions also, credit transactions also. Tambeshwari, I did not get your point. Integrated entry 2 or 1 means what? See, in integrated, the entry is this. Yes, Bhavna. You can use GLA also. See, Bhavna is asking here, instead of CLC, can I write GLA? Answer is yes. Integrated beta C, Tambeshwari. This is right from 11th standard. We have been passing one entry. So even if the transaction is both cash and credit, you will pass one entry to cash bank to creditor. So it will be a combined entry only, beta. Fine, students. So for every transaction, we'll discuss the entries in both the methods of accounting, though it is always the non-integrated which is asked, but still we have to understand both. Now comes the next transaction. You have paid wages, which may be direct wages or indirect wages. So firstly, since wages is paid, what is debited is your LCC account. LCC is this, that is labor. So for payment of wages, the entry in your normal accounts is wages or salary debit to cash or bank. Similarly, in your cost accounting, it is LCC, that is labor, to again cash bank is represented by CLC. Over here, it is again LCC to cash or bank. So under integrated and non-integrated, these are the entries. Students, any doubts? Yes. Pritika, you're right, beta. Hardik, you're right. Correct, students? Oh, no, let us wait. Don't complicate things. We will get to those entries, but what you are saying is right. You will pass the entry as LCC, that is labor debit, to for credit, it is the creditors of labor. So it is CLC again. So it is LCC debit to CLC even for outstanding wages. Same like material. If material is purchased on credit, how do you pass the entry? Same entry will be passed if wages is outstanding. You will create the outstanding wages account, now, which is the creditors of wages. Right, Bhavna? Similarly, students, whenever you incur these expenses, factory overheads incurred, administration overheads incurred or paid, you can call it as anything. selling and distribution overheads incurred. So whenever these expenses are incurred, that is paid, these are debited. What will be credited is, see, this account is created for everything: direct wages, indirect wages, factory overheads, administration overheads, selling distribution overheads incurred. So entry for wages, sorry, for overheads incurred is overheads to cash or bank in your normal books. Here it is production overheads control, administration overheads control, selling distribution overheads control to CLC as the case may be. And here it is production overheads control, administration overheads control, selling and distribution overheads control to cash or bank. Correct, Hardik? Students, are you getting this entry? So please observe, credit is falling here. There is a credit effect because this represents your creditors also, this represents your cash bank also, right? Here the credit would be falling here if it is credit. If it is cash bank, the credit effect would be falling here. But in both set of accounts, the debit is falling in the respective expenses account. Is this fine, students? Am I making sense to you? Are you able to understand? Yes, Ritika, you're right. Sanya, it will include all labor items. Generally, in our exams, it is only wages, direct wages, indirect wages mentioned. So I mentioned it that way. But labor account covers all labor costs. So you are right, beta. Everything, whether it is wages, salary, everything will be debited to labor cost account. What you want to put under GLA, beta, Roslyn? See, CLC and GLA are parallel names for one single account. So you call it CLC, that is cost ledger control. You call it as GLA, that is general ledger adjustment. Both are acceptable. Fine, not a problem. This is okay, students? Any questions further? Any doubts further? Should I proceed? Now, just be very attentive. Till now, whatever entries I was passing is similar to what you have been doing in financial books, that you are firstly incurring the expense. So all these entries are for incurring expense. The only difference is in the names of the accountants. Otherwise, the transaction is there even in financial books, what we are studying now in cost accounting books. But now things are going to change. What I'm going to explain further is not part of your financial books. You may not have seen these transactions before, but you get those transactions in your costing because they are only done in costing. Those entries, those things do not find place in financial. So pay attention. I'll just rub these transaction and entries. So now coming to the transactions which you will get in cost accounting only. Now, as we saw, when I made purchases for both direct and indirect. Here, when I paid wages, I paid wages both direct and indirect. But in costing, you have a separate category of accounts for indirect that is called as overheads. Now, costing says that transfer all indirect expense to overheads account. So now, whatever indirect material I'm having, that indirect material I will credit here and I will transfer it here. Now, this is the transaction which you do not find in financial books, because firstly in financial books, there is no category like overheads in the first place. So my indirect material is shifted from here to here. My indirect labor, indirect wages is shifted from here to here. So what is the transaction that is given in the sum? The transaction given is material used for repairs. Now, when they say material used for repairs, if material used for any purpose other than production, it is indirect material. So your entry is, since the material has gone out of your stores, so material account has to be credited, and debited would be generally production overheads control. Yes, you can debit administration also, you can debit selling also, but only when it is mentioned in the sum that the repairs is of something in the administrative department or the sales department. Otherwise, we generally assume the repairs is of machinery, which is in production department. Now, this is the entry in non-integrated. In integrated, entry will be same. So whether it is integrated or non-integrated, now these internal entries, I'm calling it as internal because now it is having no connection with outsiders. It is between our own account that we are shifting the expenses. This is the entry. So you will see the entry is same whether it is non-integrated or integrated. Right, students? Similarly, the indirect wages which is shifted, the entry is just get water point. Yes, students. So I hope transactions up to this point are clear to everyone. Anybody having any doubts or questions? Clear. Okay. Anybody else has any doubts or questions in this? Yes, students. Kindly confirm if you have any doubts, any questions relating to whatever we are studying. Yes. No doubts? Perfect. Excellent. Pay attention. Now things are going to get more interesting. Interesting, because they are different. We haven't studied them yet. So I transferred all the indirect cost to overheads. Now starts the costing part, which is called as charging. If I want to do costing, I want to know cost of each product. And for knowing cost of each product, now I need to charge the expenses to the products. Now here you have product accounts. Please pay attention. For simplicity of understanding, just remember, this is your factory. This is your godown. And this is your customer. No, beta, Srini. Because CLC represents debtor, creditor, cash bank. So when you want to transfer indirect labor, see, indirect labor is already sitting here. It is sitting in your labor account. Now, when you want to transfer, you have to transfer it from labor to POC. So entry would be POC debit to CLC. Srini, I hope I am able to answer your query. You have understood what I mean to say. So it will not be CLC, Srini, it will be LCC only, because your indirect labor is sitting in your LCC. Fine. Now pay attention, students. I have my products in 3 stages. What are the 3 stages? When the product is under production, that is the work in progress is going on. It is still in the processing stage. That is, your product is in the factory. It is, the raw material is there, working is going on the raw material, and it is yet to become final product. Godown represents finished goods. That is where your goods are completed in the factory. The production is done. Now the goods are lying in your godown until they are sold. And customer, that is COS. Once these goods are sold, they go to the customer. So that is what is the COS, which represents the customer. Just remember this to understand where which expense will be transferred. Now, I want to charge expenses. So my first expense is direct material, where it will be charged here. Because direct material means raw material, it is used for manufacturing or production, and manufacturing or production happens in factory. So what is the transaction given in the sum? The transaction given would be raw material consumed or material issued for production, material consumed for production. If this type of transaction is given, it means they are talking about the raw material which you are going to use for production. And when raw material is used for production, where it is used for production, it is used in factory. So you have to send it to the factory. Factory is the WIP. And from where it is sent from the stores. So credit the giver, debit the receiver. Simple principle. So factory has received, so WIP account debit. Stores has given, so SLC account credit. Same thing happens over here. Please remember, students, for all internal entries, the transactions, the entries would be same under integrated, non-integrated. You'll find no difference in the entries. So for direct material transferred or charged to product or material issued for production, the entry is factory debit, which is WIP, and stores credit. Fine, students? Similarly, direct labor or direct wages. Where is this person working? This person is also working in the factory. So the direct labor or direct wages has also to be charged to the factory. So again, for charging direct labor, the entry would be same, factory debit, labor credit, factory debit, labor credit. Yes, Pranav, whenever any type of assets liabilities are involved, like cash, bank, debtors, creditors, land, building, then only there will be a difference between integrated and non-integrated. Correct, Pranav. I hope students, you all are getting the transactions. Now, I want to charge overheads. So here I will charge production overheads. So it will be credited. Administration overheads I will charge. So this account will be credited. Selling and distribution overheads I have to charge. So this account will be credited. Now the question is, where are these charged? The answer is, you have three overheads account, three product accounts. Charge one to every product so that no one feels offended or feels left out. So you charge each overheads to each account. Now, if you want to know the logic, one is for a simple remembrance. I have said three overheads, three products, simply charge one to everyone. Logic is production overheads are dealing with the manufacturing activity, hence they are charged to WIP, which represents manufacturing. Administration overheads, if they are general, they are charged after the production is complete, so it is charged here. If administration is general, and only then we put it here. And selling and distribution are charged to products which are sold, hence it is charged here, because this account represents the goods which are already sold to your customers. I hope students, you are also getting the logic of these entries. So the journal entries for charging overheads would be overheads charged. It will be WIP to POC. It will be FG to AOC, and it will be COS to S&DC. Again, it is common in both, so I have written it parallelly. Students, I hope you are getting. So in red, you have the entries for transactions where expenses are incurred. In this slightly water blue or green color, you have the entries for indirect expense which are transferred. Then in blue color, you have entries for all expenses which are charged to the products. Hope clear. Anybody, any questions further? Should I proceed, students? Now coming to again something interesting. Now see, students, this account, which is factory, that is WIP, has all the expenses which are charged. Now what is happening in this? Production is happening. Now once your finished goods are produced, are completed, they will go out of the factory to your godown. So finished goods produced. Finished goods produced. So once the goods are produced, production is complete. Physically, the goods will come out of the factory area to the stores area, to the godown. So they will be removed from factory and they will be shifted to your godown. I hope this is understood. So what would be the journal entry? The transaction given in the question is finished goods produced. Goods produced. Finished goods at cost. Cost of production. These are the parallel names given. The entry is finished goods control to WIP control. Right? I hope you all are understanding the entries. We are on the most technical part of this chapter. Clear, students? Now, once these goods are sold, they will go out of the factory and they will reach whom? It is COP's cost of production, Tambeshwari. So these goods, once they are sold, they will come out of your stores or go down and they will go to your customer. So cost of goods sold. So goods which are sold will be shifted from your stores, your godown to your customer. So the entry for cost of goods sold, or they say goods sold at cost. These are the different transactions given. The entry is COS account to finished goods control account. See, understand the logic. This is customer, this is your godown. So once the goods are sold, customer receives the goods and the goods are going out of your godown. So hence debit the receiver, credit the giver, right? So when these goods are sold, they are transferred from finished goods account, which is your godown, to your customer, which is your COS. And finally, the total cost, that is the cost of sales, which is COGS plus S&D. The total of this becomes cost of sales. Cost of sales at the end of the year is posted in P&L. So P&L debit is the total cost, which is the cost of sales, representing the cost of those goods, the total cost of those goods which are sold. Generally, this transaction is not given in the sum. You do it by yourself at the end, like how you pass closing entries. So this is one of the closing entries. So cost of sales transferred to cost P&L, not given in the sum. Sum does not give this transaction. It is like transferring the closing balance. So you do it yourself when you are closing the books. So cost P&L to COS. Now, when sales happen, now this is again going to be very interesting, students. Pay attention. We are not having a separate account for sales. Now, what happens in your financial books whenever sales happen? So for sales, which may be for cash or for credit, the general entry in your financial books is what your financial books will do for sales. Your financial book will say cash or bank or debtor to sales. Then your financial books will say what? Sales to trading and P&L account, right? This is what your financial books will do whenever sales happen. So first is sales happening, then sales getting transferred to your trading P&L account, the trading portion. Now, since I'm not preparing a sales account, we are not having a sales account, we have to pass an entry without the sales account. So how it will happen? I will merge both these entries. If I merge both these entries, so my entry for sales becomes cash bank debtors debit and trading P&L account credit. This becomes my entry in my financial books when I merge both these entries. Now I post the same in my financial books. First, let me give you the integrated. In integrated, cash bank debtors will remain same and trading P&L account over here is called as my cost P&L account. So the entry for sales is cash bank debtors debit as the case may be and costing P&L credit. In your non-integrated books, this cash bank debtors is replaced by CLC. Yes, Hasi, you're right, beta. And the entry is to cost P&L. So please understand, we have combined both these entries because I don't have sales account. So I do not want to use the sales account. So my direct entry by merging both these entry will be sales debit and credit will get cancelled, knocked off. So my entry would be CLC debit, cost P&L credit in non-integrated, cash bank debtors debit, cost P&L credit in the integrated. Right, students? So I'm writing sales here, for which the second effect is here if it is non-integrated. And if it is integrated, the second effect is credit sales is here, cash sales is here. So cashback is debited, debtors is debited, and cost P&L is credited. Or CLC is debited and cost P&L is credited. Is this fine? So this is your complete accounting. This is your complete accounting. Understood, students? Are you getting the flow of all the transactions? Anybody having any questions, please feel free to ask. See, I'm going very slow because if you understand these entries, then solving sums would be just a matter of time. Yes, please take screenshot. That is why I have adjusted the screen accordingly to cover everything in one screen. Done? Understood, students? Everything clear? Pakka? Now, we have to close the books. Pay attention. This is material account, which is a stock. So we will also have opening stock at the start of the year. Pay attention. So at the start of the period, I have some opening stock here. And at the end of the period, I'll have closing stock also here. So this account will close by carrying forward the balance. This account anyways will have no balance because debit was direct indirect, credit was direct indirect. So this account is anyways closed. These three accounts, production overheads, administration overheads, selling distribution overheads, have broadly two transactions. One, debit side of expenses incurred, credit side of charged. Incurred, charged. Incurred, charged. Now, at the end of the year, you have difference which represents under over absorption. And here, we do not apply what we studied in production overheads or the overhead chapter. That is, we do not break up into normal, abnormal, etc. We assume everything is abnormal. If you assume that, then the difference, let us say here the difference is of under absorption. It will directly go to P&L. So under absorb production overheads. Let us say here you have over absorption. Again, this will go to P&L. Over absorb administration. Let us say again here you have over absorption. So this difference will go to P&L. Over absorb selling and distribution overheads. So This account is closed by transferring the difference to P&L, assuming the entire under or absorption to be abnormal. Now, in some cases, they also carry forward this balance. This is done because we presume, or this happens whenever the question is not of the whole year. That is, you are solving only for a month or a quarter. In such a case, the difference will be carried forward. I'm talking about the overheads account. So in some cases, they carry forward the balance in the overheads account. That is when the sum is not for the whole year, or that is specifically given in the question that you carry forward the balance. Srini saying, sir, material is adjusted first against SLC and after adjustment to WIP when it is issued, but for other costs it is adjusted to CLC directly. Why? No, beta. No cost is adjusted to CLC. First, from CLC, it goes to the respective account, cost account, and then from that account, it is charged to the product. No, but I think your question is not correct, Srini. You said in costing P&L, we are entering the initial material cost. Where have I entered material cost in costing P&L? Is there material cost anywhere in costing P&L? Everything goes firstly to the respective expense account, Srini, and from there it is charged to the product account. That is there for all expenses. You can please check where you are finding material account in costing P&L. I don't know. Right, students? So material account, closing stock carry forward, labor account, no difference. Overheads account, you have difference, which we always assume to be abnormal, so it is transferred to cost P&L. In some cases, instead of transferring, you may have to carry forward. That will be mentioned in the sum. Accordingly, if the sum requires you to carry forward, you will carry forward. Now, again in WIP, you will have opening WIP given at the start. Closing WIP, you will find out which will be carried forward. Now, it may happen in a sum. Closing is given, then this will be the missing entry, that is of finished goods produced. If finished goods is given, then this is always the balancing figure as a closing entry that you find out. Next, again, here you have opening finished goods because this is also stock. So see, you have three stocks. One is stock of material, one is stock of WIP, one is stock of finished goods. So you have opening finished goods given. At the end of the year, you will find out closing finished goods, which will be carried forward. Again, if closing finished goods is given, this will be the balancing figure, which you have to find out, that is cost of goods sold. Again, after putting this balance carried down figure, this account will get closed. This account, as I mentioned, was closed by transferring this total COS figure from cost of sales to your P&L. And now in P&L, you have cost of sales, you have sales. By comparing these two, you get profit of each product, which is one of the objects of cost accounting. So by comparing cost of sales and sales of each product, you'll get to know profit of each product. Then we adjust our under or absorption. If there is any other abnormal loss or gain, that is adjusted over here. And finally, you get the figure of net profit or loss. Now, where is this net profit or loss to be transferred? If it is integrated, it will go to capital and reserve. If it is non-integrated, it will go to CLC. So whatever is the net profit or loss figure at the end, at the time when you are closing, that net profit will be transferred from here to here. Or it will be transferred from here to here. So depending upon the method of accounting, the net profit that you will get will be either transferred to CLC, that is on the debit side, credit side of CLC, or it will be transferred to the capital and reserve, that is on the credit side of the capital and reserve account. So even this account is closed. So see, students, how these accounts should be closed. Material, closing stock. Here, no difference, labor. These are under or absorption, so transferred to P&L or carried forward. Here closing stock, here closing stock, here this difference entire transferred to P&L, and P&L, whatever profit loss difference you will get, that will be transferred to capital and reserve. Now, this is also having opening balance because it represents assets and liabilities. At the end, you will find out closing balance. And this will be carried down. So this account will be closed. So since this account represents assets and liabilities, it will have opening and closing balances. Opening balance will be given in the sum, closing balance you find out, and that is how this account will be closed. Similarly, for each of these assets liabilities, there would be opening, closing. So for all assets and liabilities, there would be opening, closing, and that is how these entire accounts would get settled, would get closed. So this is your entire cost accounting, students. Anybody having any questions? Yes, we'll have a short break of 2 to 3 minutes, and then we will go to practical sums. I have uploaded the sheet yesterday itself. Kindly download the sheet on cost accounts. We will solve 1 or 2 sums as what time permits, but after a break of 3 minutes, 3 to 4 minutes. Let us start. Okay. Let me take you to sums, how you get in exams. So see, this is the question that you get. These are all exam questions. Let me start with this. Now, you have two methods of accounting, integrated, non-integrated. How do you identify in the exam whether it is integrated, non-integrated? It is from the opening balances. See, if in the opening balance they have given CLC or GLA, then it is an integrated question. Similarly, if in the opening balances they have given, is this clear, students? How to identify whether the question is integrated or non-integrated? So depending upon what opening balances are given. But I said, if the opening balances have the balance of CLC, that is cost ledger, or GLA, integrated, because in non-integrated, this is the account which is different. And if it is integrated, how you'll identify the opening balances will have opening balances of debtor, creditor, fixed asset, capital, P&L, reserves. If these are the opening balances, it means the sum is of integrated. Is this clear? Right? Now, there is a third possibility. The third possibility is the opening balance does not give you the opening balance of this. So it is only giving you opening balances of other accounts like SLC, WIP, FG, but it is not giving you opening balance of CLC. Please understand, this is also a sum of non-integrated. Why? Because this account will be the balancing figure. So if let us say opening balances of CLC or GLA is not given in the sum, this opening balance you can easily find out by finding out the total of the other balances. So if you make a total of the other balances, you will get the opening balance of CLC. Because as a general rule, opening and closing balance sheets are tallied. So my opening balance sheet also should be tallied. My opening balance sheet is having these three stock balances. So how it will tally? The total of this will be the balance of my CLC. I hope this is clear how to identify whether the sum is of integrated or non-integrated, right? Okay. Any doubts? No doubts. Should we start? Now, we have to prepare ledger accounts. Generally, this is what is asked, preparing ledger accounts. So you'll prepare the ledger accounts all together. Now, just for paucity of time, I'm using short forms so that we can just solve maximum number of sums. So you have SLC, that is material, LCC, that is labor, POC, AOC, SNDC. Right? Then you have the product accounts, that is WIPC, FGC, COS, and then you have the main account, which is the CLC, cost ledger control, or the general ledger adjustment. Right? Is this clear, students? So let us start. You have to be giving me the entries. So first I start with the opening balances. SLC 35, WIP 38, 25, 98. 35, 38, 25, and 98. So by balance brought down. To balance brought down. To balance brought down. To balance brought down. Fine, students. So I've posted the opening balances. I'm writing the figures, which are amount, rupees in thousands. Now, what are the transactions that have taken place? Purchase of material, return to supplier, issue of material to production, and return from production to stores. Now, you should always pass the dual effect of each transaction. So, for purchases, my entry would be SLC debit, CLC credit. You may start posting the entry, students. Yes. Now, give me the entry for the second transaction first. Good. Sagar. Hardik. Good. Very good. So you all are correct. This is exactly opposite of the previous entry. In previous entry, we posted entry for purchase. This is the entry for purchase returns. So whatever we posted for purchase, this entry will be opposite of that. So now for this entry, we have to pass exactly reverse. So it will be by CLC and to SLC. So this is purchase returns, correct? I hope you all are understanding this. Right, students? Great. Give me the next entry. Third entry. You may post entries for both together. Chalo, let us make it a bit fast. So post both entries together. Aisha, Should it be the other way around, beta? Check. But why POCs, Aisha? Is it direct material or indirect material? Ajay Surya, why POC, beta? Whoever is saying POC, my first question is it direct material or indirect material? See, when the material is issued to production, I can understand why this POC has come because the word production has come. But production is direct material. It will go to WIP. If it would have been material used for repairs, maintenance, it would have gone to POC, which represents indirect material, that is overheads. Material issued to production is always direct material. It will only go to WIP. And this is material returned to stores, returned from where? Returned from the same production person. So both are opposite entries. This is giving material to production person. This is getting the material back from production person. So first giving and also getting back. So whatever is surplus material, that is received back. Same thing will happen. First, they have received the material. Second, they have returned the material. Right, students? Sagar, you need not type all the figures. You may use short forms. Now coming to a very important transaction, students, that is for labor. Now see labor, both direct and indirect wages are given. Please pay attention for labor only. This is the only transaction where you have to pass both entries. First for incurring, second for charging. For incurring, entry is labor cost to CLC. The amount is total. So for incurring labor cost, I make a total, direct, indirect. Total is debited to labor cost and credited to CLC. Correct? Now comes the most important point. In this, we already know that there is something which is direct, something which is indirect. Direct is charged to WIP, indirect is charged to POC. So what is important in labor transaction is you are given this transaction once, but this transaction represents both incurring also and charging also. So you have to pass both the entries. So first I passed entry for incurring. Now I will pass entry for charging. So direct will go to WIP, indirect will go to POC. So direct, indirect, direct, indirect. Right, students? I hope you all are understanding the entries, the postings. Hope I am not going fast. You all are able to understand everything that we are discussing. Yes, students? Pranav says yes. Anybody else? Any doubts? Any questions? Hardik says yes, understood. Other students, any doubts, any questions? Please feel free to ask. All clear. Good. Now, overheads incurred, overheads incurred. Here they have said selling and administration combined, so we will also combine it. So both overheads are incurred. Factory is 50, selling administration is 40. So I will make this account as selling and administration, and I'll not need this. So factory is 50, selling administration is 40. For incurring, the entry is 2 CLC. 2 CLC. Here in CLC, by production overheads, by selling and administration overheads, right? But how it can be CLC to LCC? It will be the other way around, na? CLC is the creditor, is the cash bank. It will always be credited because that is the person who is paying. So for incurring, expense account is debited, beta, Mr. Sitkala. So for incurring, the expense account is debited and CLC is credited. I hope I've made it clear. You got the answer, beta. So overheads incurred. Now pay attention to these entries, students. You have to first understand what the transaction is. Finished goods are transferred to warehouse. If they are transferred to warehouse, from where to where they are going? They are going from factory to warehouse. Warehouse is my finished goods. Factory is my WIP. So credit the giver, debit the receiver. So it is yes, Sagar, you're right. So no kasak. It is the other way around. So finished goods, that is the godown, is the receiver. So FG is debited. Factory, that is the WIP, is the giver. So factory is credited. These are the small common mistakes that happen with everyone. Now, this represents the goods which are sold. So when it is sold, customer gets it. Customer is represented by COS, and who is giving the factory? The godown is giving, which is represented by finished goods. So customer debit, finished goods credit, right? So customer is getting it. So COS debit, godown is giving it. So finished goods credit. And then finally the transaction for sales. As I mentioned, for sales, we have a direct entry whereby cost P&L is credited by the amount of sales, and CLC, which represents debtors, which represents cash bank, will be debited by the amount of sales. Pranav, the entry is passed between CLC and cost P&L beta. Yes, Sagar, correct. Now, after posting all these entries, there are some more transactions. Factory overheads are charged at the rate of 150% of direct wages. How much was your direct wages? Direct wages was this into 150%. It means factory overheads are charged 60,000. Now, where are these factory overheads charged? The factory overheads are obviously charged to factory. Factory is represented by WIP. So 60. How did I get this? 40 into 150%. I charge it here to POC 60. Yes, you're right, Sagar. WIP to POC. Now, further what they have given, any under or absorption being carried forward. So they have specifically asked to carry forward. Had they not mentioned this, I would have transferred it to cost P&L. Now, administrative selling overheads are treated as period cost, which means they have to be charged to cost P&L only. So anyway, since they have merged these two accounts, so we did not know whether it is selling or administration. So they have made it simple for us. They say that it is period cost. So let it go to cost P&L directly. So I'm posting it to cost P&L. Correct? That's it. So all transactions are done. Now, once all transactions are done, we will go with the closing of these accounts. Pay attention, students. Material is or should be having a balance because it represents stock. So whatever is the balance, that will be my closing balance. By balance carried down, this account will be closed, right? So how much is the balance? I am getting the balance as 32. Please cross check. LCC, it is anyways closed because you only debited this, you only created the same amount. So it is already closed, right? Now, POC, whatever is the difference represent under or over absorption, which otherwise I would have transferred to P&L, but here they have mentioned that it should be carried forward. So since they have specifically asked me to carry forward it, that is why I am carrying forward. This anyways is closed because entire balance we were asked to transfer to P&L. Now again, WIP, the difference represents the closing stock. So it is balance carried down. We can also call it as closing WIP for your reference. Correct? What is the balance in WIP? Is it 20? Pranav is saying 20. Okay. Similarly, FG, you have opening balance, you have material produced, you have material sold. So you will have closing balance of FG, which will be carried forward. Right. COS. Oh, I made a wrong posting. Sales should have been posted here. So COS, I transfer it to cost P&L to 10. So cost P&L will have debit of COS to 10. Now you have selling and administration debit 40. Credit is this. Now the difference represents your net profit here, which comes to 50. We transfer it to CLC because that represents my capital account also. So I transfer this difference to CLC by cost P&L net profit. And now this will show my closing balance. Students, please find out the closing balance. So see, students, this is a basic sum on this particular topic. It covers 80% of the transactions that you can get in any type of non-integrated sum. Yes, there could be more special transactions, but as you all know, this is the regular batch in which we only deal with the basic ones. For special ones, you should go to our revisionary batch where you will find all the other special transactions done. So I'll request that you all please refer the regular batch also and also the revision batch. So regular batch will be more detailed conceptual part and the revision batch would be more on the practical and the solving part. I hope this is clear. Tambeshwar is saying WIP is 213 more debit side. Check Buddha. How it is 213 more. Please tell me the closing balance of CLC. Okay, Pranav is saying 95 is the back by Pranav. 95. So this is how entry for non-integrated is passed. Now we'll take one sum on integrated as well. So for your understanding, 1 second, I'll just make it available to you for screenshot. So whoever wants to take a screenshot, may kindly take a screenshot of this. Done? Now, let me take one sum on integrated also. So this is the sum. Integrated generally consumes more time because more number of accounts have to be opened. But you'll first open the same account that we prepare normally. So this is sum number 4. So sum number 4, you first prepare all the regular accounts. So you have SLC, you have LCC, you have POC, you have AOC, you have S&DC. Again, for products, you have YPC, you have FGC, you have COS, and you have cost P. Now, this is common between integrated, non-integrated both. The only difference lies in the assets and liabilities. Now, if it is integrated, we'll open separate asset and liabilities account. Which asset liabilities you require is bank, you require debtor creditor, fixed asset, debt provision, capital, profit and loss. So I have debtors, I have creditors, I have cash and bank. Then I will have fixed asset. I will have depreciation provision. I will have capital. And I'll have the general P&L account, which is actually representing the opening balance of P&L and maybe reserves. So posting 3, 4, 6.5, 3, 4, 6.5. Sorry, finished goods is 4, 6.5 is. Raw material is 6, debtor 1, creditor 2. 6, debtor 1, creditor 2. Fixed asset 102, debt provision 2.5. Debt provision 2.5. 110 capital and 8 is 110 is capital, 8 is P. So it is by balance. Balance. By balance. To balance. Okay. Now, after putting all opening balances, let us go to the postings. Material purchase on credit 10. So material purchase SLC debit and it is on credit. So creditors will be credited. So 10 creditors by SLC 10. Right? Material issued for production, direct and indirect, 7 and 1. 7, 1. Direct will go to WIP. Indirect will go to POC. So WIP 7 for direct. POC 1 for indirect. Yes. Right, Sagar. You can combine the two entries. Now, payment to creditors, payment received from debtor 6 and 35. Payment to creditors, so to bank 6, by creditors 6, and payment received from debtors is 35. By bank 35. Correct? Now, this is something interesting. Depreciation on assets. Now, when it is depreciation, please remember, students, we do not have any account in cost accounting called as depreciation. It has to be either material, labor, or overheads. Now, we all know depreciation is neither material nor labor, it is overheads. But in overheads, we have the production, administration, selling. Where it will go, that will depend upon which asset this is. If it is asset relating to factory like factory building or plant and machinery, it will be factory overheads. If it is some office building or any office equipment like AC or your any office asset like sofa, furniture, computer systems, it will be administration. And if it is any selling asset like selling building or your sales delivery van depreciation, it will go to selling and distribution. If nothing is mentioned, you can presume and you can take it in factory overheads. So since nothing is mentioned what this asset is, we'll consider this as factory overheads. Now, what is the entry for depreciation in accounts? It is depreciation to depreciation provisions. So for depreciation, we have this POC. And for depreciation provision, you already have an account. So I will transfer this to depreciation provision. So entry is depreciation to depreciation provision in your accounts. In cost accounts, it is for depreciation, we have POC and we have depreciation provision. Wages paid, which includes direct and so indirect is 2. So firstly, wages paid entry is LCC debit to cash bank. Here it is bank 12. So LCC 12. Out of this, direct wages will be posted to WIP, indirect will be posted to POC. LCC 10 to LCC 2. Hardik beta, in non-integrated also the entry will be same. Depreciation debit will be going to POC and yes, credit will go to CLC. You're right. So debit in case of non-integrated for depreciation will be POC, credit will be CLC. Next, finished goods produced and cost of goods sold. So this entry represents first goods which are transferred from factory to godown and from godown to customer. So see, first you need to understand what the transaction is. Once you understand the transaction, entry would be easy. So firstly, for transferring the goods from factory to your godown, we debit godown and we credit factory. So this is FG to WIP. And for selling these goods, it is customer to finished goods. Correct? By FG to WIP by COS. To FGC. Is this clear, students? Hope there is no question or doubt. Yes. Great. Super. Let us proceed. Now, sales value 40,000. Now it is nothing mentioned. We always assume that it is on credit. So debtors will be debited 40,000 and your cost P&L will be credited. Cost P&L credited, debtors debited. This entry is for sales. Right, students? Correct. Now, overheads incurred. So it will be overheads debit and cash bank credit. Six, one. By production overhead 6, administration overheads 1, selling distribution overheads 5. This is expenses income. All right. Now expenses charged 9, 1.8, 1.7. 9, 1.8, 1.7. Now there are 3 overheads and 3 products. This is a simple logic. So this goes to the first product account. This goes to the second product account. This goes to the third product account. So this is the simplest way of remembering, right? So posting, again posting, and posting. Right, students? Everything is done. Now we go for balancing. Now SLC, opening balance, purchase, transfer for production, transfer for repairs. So now you have closing balance. And this account is closed. It comes to it. LCC is always tallied because you only pass the debit and you only pass the credit. POC, whatever under over absorption is there, will transfer to cost P&L because here nothing is mentioned about carrying forward. So 6, 7, 9, 9.5. So 0.5 is the difference. We transfer it to cost P&L. Again, same thing for administration. Student, just remember that whatever you are doing in one account, immediately do the posting in second account. Many times what we do is we just keep on making entries in one account. We forget the second effect in the other account. And then at the time of balancing, you may end up with either non-tallying or having wrong balances. Correct? So always make the second effect immediately. Now FGC, WIP, all these will have closing balance. So 6, 13, 23, 32. So it is 2.5. Correct? 4, 30, 35, 35 and 32. So 3.8. 32 and 1.7, 33.7. This entire amount is transferred to cost P&L. So COS fully goes to cost P&L. To COS 33.7. Now from P&L, we get profit or loss, which is transferred here to general P&L. Now, since you are given general P&L, I need not transfer it to capital. I will transfer it to general P&L. So 41.5. So 41.5, 41, 41. 7.3 is the profit which I am getting. Just cross confirm with your calcs. 0.3. Yeah. This immediately I'll transfer to general P&L. You should develop this habit of immediate posting on both sides to avoid any type of problems. Now, debtors closing balance, creditors closing balance, cash bank closing balance, 6.67. Fixed asset closing balance, appreciation closing balance, capital closing balance, and P&L closing balance. So this is how entire accounting will be done. Again, you can take a screenshot, students, for your future reference. Taken? Understood? Great. Yes, beta, Hardik. We'll do that. I know that beta, one class is too less, so I'll definitely take reconciliation. I'll take permission from BOS and I'll take reconciliation separately. Yes, because that needs to be given some time. I cannot merge it with this or else it may not happen. I'll do that. Don't worry, Hardik. Fine, beta? Excellent. So students, it was really a great time. I'm sure I could add a lot of value to you in today's lecture in terms of the topic, in terms of the concept, and also in terms of some tricks and techniques. So I wish a very, very happy Diwali to all of you all. I wish that today's special day of Dhanteras, which is referred not only for wealth, it is also the day to be celebrated for the Dhanvantri Devta. So great health, great wealth, both are celebrated today. So I wish you all the best of health, wealth, career, character, and may you all serve the nation as what is the motto of our institute. And let us all aspire to be the best professional in our fields, having the most supreme knowledge of our domain. So thank you. Thank you very much, students. Let us connect in the next class with your doubts and with further questions. Thank you, Beda. Thank you, everyone. Take care and enjoy the festival seasons. Thank you very much and wishing you very happy Diwali, technical team also. Thank you. Bye-bye.